Are you worried about the current market scenario with the trade tariff wars and the retaliatory measures which are being taken by the other countries? Your portfolio is already down, it is in loss, and maybe it is incurring more losses. Stay till the end of this video and you'll understand what you can do to save your capital, and also in this process where the downfall has already started, how you can make some extra money. If you like this video, don't forget to share this and also subscribe to this channel. So let us begin. Where can the markets go and what to do? There are multiple things what you can do is, number one, first is don't invest right now in the markets. Let the market settle. Let's see what happens in the next few days and weeks to come. So you're planning to put more money in the market. Don't put just because the prices are low. Don't try to catch a falling knife because we don't know till where the prices can go. If you get an indication like whether if there is a company where there is no connection with the tariff wars, and if there is indication and confirmation, can we buy? Yes, definitely you can buy, provided you get into the system where you get an indication, you get a confirmation, but don't try to go for very long term. Okay, you can book for the positional trades. So positional, if you're getting somewhere like 5%, 10%, then that can be like a positional trades, and those can be good in the short run. If you see over here in the Indian markets, even now, the percentage fall is not so great as of now. Okay, I'm just going to compare the percentage fall. Percentage fall which has happened, okay, is just the lowest part was 16%. Then even now it is 12%. Compare that with Dow Jones, where let us see where the fall is, how much is the fall percentage from year to year. Within a few days, now it is back to 15%. Okay. So what? From this was February, March, April. So within less than 2 months, there's a fall of 15% in the US market. And Indian markets, Nifty May, it is as of now 12%, and the low, earlier low was around 16%. So possibly this low might come. ठीक है, तो ये possibly अगर ये low आता है, that is one possibility. Worst situation, it might make a lower low also. And if it goes for a lower low, we can expect the price to come up to this low of 4th of June. Everybody knows what's happened on 4th June. That was the election results day, but there was like a big dip. So that can be your next support if at all the price comes. But by then there will be a lot of damage because over here it is 22,900. This is 21,300 approx. So more than 1,600 points down from here, but still the percentage is not going to be more than 20%. Okay, 16%. Now that is the worst scenario. We are talking about the worst scenario. So in the worst scenario, what to do? One is don't enter right now for long trades. Even if you entered into a long trade, and now second thing what you can do is, if you find that your individual stocks are, let us say, going lower and lower, okay, are going lower and lower, and your losses are increasing. You find that you are already invested, then there was like 5% loss, and there's a 10% loss, and there's a 15% loss in a particular script. You feel that the prices are going down. Now, what you can do over here, which I can show it to you in terms of the charts. Okay, what we can do is I can show you over here how you can exit at a something called as a trailing stop loss. Okay? Trailing stop loss, because trailing stop loss is something which some of you are not following. Trailing stop loss not only on the long side but also on the short side. शॉर्ट साइड में जैसे अगर किसी ने पहले अगर एग्जिट नहीं किया है, then there are different stages at which you can still exit and save some of your capital. You can enter again, वापस एंटर कर सकते हो कभी भी. I'll give you an example. Suppose if you entered here, and I'll take example, let us say वो Cochin shipyard. Cochin shipyard was at a high of, let's say, around 3,000. Then it came down to something, let us say 2,900, 2,800, and let's say you bought also at 2,800. खरीदा. Okay, whatever, there could be some small things. And at 2,700, there was a, let's say you should have exited. ठीक है, लेकिन आपने एग्जिट नहीं किया एंड द प्राइस नाउ कंटिन्यूज टू फॉल, ठीक है, यहाँ पे फॉल हुआ, सो दिस बिकम नाउ 2500, तो फॉल के बाद लेट्स से प्राइस कम्स अप and if it continues to go down, your next trailing stop loss becomes this. Okay, I hope you understood. This is your original stop loss. ये आपका original stop loss है, and this becomes your trailing stop loss. Trailing stop loss to exit. Now this could be very well maybe 2600 or so. क्योंकि यहाँ पर भी exit नहीं किया, you know that Cochin shipyard low is around 1200. Okay, I'll show it to you right here on the graph. So this is what I mean by trailing stop loss. So अगर आपका already loss में जा रहा है, whatever is your loss, you try to protect whatever is your remaining capital unless it has gone to a very low level. मान लो you entered, then you did not do anything about it. If you invested like say 10,000 and then now that has become like 1,000. Okay, 80-90% loss here, then this does not apply to you because you have waited so long, then might as well wait another maybe 1 or 2 years for the price to come back. But if you have entered recently and there's a 5%, 10%, 15% loss, then you can use this concept of trailing stop loss. Okay, so this could be trailing stop loss of 2600 over here. I'll show you on the chart of Cochin shipyard. This was something what started happening over here, right? So this was where the price was at approximately 2,800 or around 3,000 or so. Okay, you can see, I'll mark the highest price, which was 2,000, approximately 3,000 or so. Someone has, let's say, bought here or they bought here, then this should have been your next trailing stop loss. You might think here that this is like a breakout and you buy over here. Now this is your stop loss. If you don't exit here, okay, this was which was your first stop loss, then this becomes your trailing stop loss. यहाँ पर भी नहीं exit किया and you wait in the hole, wait and wait and wait and wait and wait, then what happened? The price went all the way up to how much? 1250. Ideally, the first thing is you exit immediately the moment your first stop loss is hit. If you don't exit at the first stop loss, then try to find out where is the next trailing stop loss where you can exit if the price continues to fall and try to protect your capital. And now, once you have exited from the trailing stop loss, now your duty starts. Okay, don't forget this stop. Keep this in your radar. This is I've already exited this from stock at so and so level. When that stock again gives you a fresh indications to buy, that time you can enter probably at much lower levels. Like somebody is exited in Cochin shipyard at 2,200, 2,000 rupees. And when it came to 1,200, again give you a buy signal. You could buy with the stop loss of 1,200 rupees. So that is what you can do, because somebody had asked me that now since then the markets are coming down, what we should do. Now the third one, if you want to really take advantage of the market, then what you can really do is in the futures and options. Market is a double-sided jacket. When the markets go up, you can make money. When the markets fall, that time also you can make money. So if you understand how the futures and options work, you can do something which is called as shorting in the futures and options. There are two ways. One is where you're taking little higher risk, where you only short with a future. You just sell the future, right? And then if the price comes down, you've got unlimited profit and then there's unlimited loss if the markets move in opposite direction, because you're thinking that the price will come down. So you shorted the futures. If the price continues to go down, there is unlimited profit. But if there's a reversal and the price goes up, there can be unlimited loss till the time you exit from the trade or till the time the contract finishes. Now, if you are little conservative, then you can go in something called as strategies. So in the strategies, you may not get unlimited profit or even unlimited loss. The loss can be a very small amount and the profits can also be reasonable, but may not be as high as the unlimited profits. So someone is entering into strategies for futures and options. You can enter into strategies called as bear put spread. जो spreads आते हैं options में, you can go for bear put spread. You can also go for a covered put, where you sell the futures and you also sell a lower put. So when the market falls, you don't have to wait in the hope that when the market improves, that time I will again enter into the market, but you can take advantage as a bear and you can make money in the bear market also. So I hope you understood how you can take advantage of the fall, right? So the things what you can do as an investor, first of all, don't invest. Secondly, if you have already invested, exit with a stop loss, or if not the stop loss, then exit at the next trading stop loss. And number three, you can make money from the markets as the markets fall. I hope this was useful for you in terms of understanding that what you can do now that the markets in a turmoil and they're falling. I hope you got a good idea about what you can do in the markets, and accordingly you can either take your position, exit from the stop loss, and also trade if the markets continue to fall and make money on the way down also. If you like this video, do subscribe to this and forward it to your friends. And see you soon in another video. Bye.